Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about USD JPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the technical side of the market, here on the monthly time frame, what we can identify is that this market is currently rejecting to the upside a quite significant level of previous monthly resistance, which has now turned support. In fact, from here, all this previous rejection to the downside was created. This level has now been broken to the upside, so this previous resistance is now turned support. The market has already tested it and is currently rejecting it to the upside quite aggressively. So from a monthly perspective, everything seems quite bullish and we could expect more potential bullish continuation away from this zone. We can also notice that this was not only previous resistance turned support, but it was actually a confluence of support area, because we had also a quite clear impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we had a perfect 50% retracement lining up exactly inside of this area, creating confluence of support inside of that zone with the previous resistance turn support and the 50% that we did in fact expect this market to test and then to reject to the upside, as we are currently seeing. Dropping down on the weekly time frame, what do we have? From a weekly standpoint, we can notice how the level that the market is currently rejecting is exactly this previous high from which all this rejection to the downside was created. And when the market rejected this level to the downside, this was a confirmation that this area is actually a quite strong supply and resistance zone. And since the market has now broken it to the upside, this previous supply is now turned demand and support, which in fact has already been tested by the market with the creation of this red candle, which tested its zone and immediately started getting rejected to the upside, confirming this level as strong demand and support. Now, dropping down on the daily time frame, what do we see? Now, from a daily perspective, the price action is quite clear. Now, I did speak about USD/JPY quite a few times in the past. I spoke about it when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside. In fact, that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect this rejection to the downside. Again, that is exactly what the market gave us. From here, I explained all the reasons for which we could expect this impulse correction and continuation to the upside, which again is what the market gave us. And then we had the creation of this M pattern. From here, explained all the reasons for which we could expect this rejection to the upside, which at the moment the market is currently giving us. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. Now, at the moment, since the market is currently creating new structure, it's time to make an update and see where the market has the probabilities of making another move. Now, before we dive into the structure that we have from a daily perspective here, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. Now, if we check the data for the JPY, we can see how with the last reports, we went from having minus 77k net positions all the way down to minus 98.4k net positions. This shows how a massive amount of orders from an institutional perspective is moving to the bearish side of the JPY. And what you have to keep in mind is that all currencies on the spot are traded against the USD. So if you're checking the data for the JPY, you're actually already checking JPY USD, meaning that if institutions are shorting the JPY USD, which we can clearly see that they're doing here from the decrease of the net positions, it means that they're actually longing USD JPY. This means that we have more probabilities of more bullish continuation as the market has already been creating since institutions are longing USD JPY. Now, moving back to the technical side of the market, we can notice how this area is very strong previous resistance from which all these rejections to the downside were created, which is now turned support here. If we will have a successful break above this resistance on the retest of this previous resistance turn support, this is where we have quite good probabilities of a potential rejection to the upside away from this area. So if we get the break on the retest, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. And here is where we have good probabilities of seeing more institutional longing, since it is a strong support area and institutions are already longing, as we have already seen from an institutional perspective. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have the possibility to gain completely free access to the mentorship program by following 3 very easy steps. So I really suggest that you go and check it out. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.